The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Darrell Martin.
Welcome, folks. Darrell Martin, Tom O'Brien. We appreciate you growling and prowling with us out here. Dow Industrials right now down 66. You get the Nasdaq off 6.5. S&Ps are off 2.5. Gold is down 8.70. You get silver down 7 cents. Bonds. The bonds, they just can't keep them down. You get the 10-year up 9 ticks at 127. 30-year is up 19 at 144.22. And King Dollar is what it's all about, folks. King Dollar right now is down 237, trading at 88.69. Had been down 400. You can expect volatility all day long out here. Euro is up 26. The yen is up 39 at 119.03. And folks, if you haven't test drove the Nadex platform yet, come over to our website at TFNN. Go see the banner on the top, on the side. Hit that banner. You can bring up the platform. It's an outstanding platform. It's defined the risk in an incredible way. Mr. Darrell Martin, each and every trading day, 1 to 2 Eastern Standard Time, has an outstanding show. He specializes in this Nadex platform. Also has a great analyzer. You can test drive that. First, bring up the platform, folks. It's free. Bring it up, test drive it. Then test drive the analyzer. The analyzer is not going to tell you whether to go long or short. What it will do, however, is once you develop what strategy you would like, it's going to give you the best contracts in order to trade that strategy. Darrell Martin, what's going on?
How you doing, man?
Well, it's a big week. You talk about volatility and you talk about trading the Nadex product. It's pretty amazing, folks, because what you have is that because we're talking defined risk number one, you can make a case that this week you could be a bull or a bear and make money, because the bottom line is that the spreads from high to low and low to high have been both sides. That's what it really comes down to, which is, and the amount of movement, folks, has been incredible. There's no two ways about that. Coming out here this morning, if we start with the S&P, so check it out. If we start with the futures, what we have out here, I suspect, is that we get an ABC structure on the way down. The future already got down to 216. You're at 228 right now. That's intraday, and if we take a look at how we're shaking out here, what you have is this. You did 100% move, actually more than that. You had one expansion up, which was at 920, and then right now what we're doing is you're coming into the downdraft that had been created on the 10th, and that is going to be a hard number to break, and that number is 2032, right around there. If we go into the gold contract, now we're going to be able to have some fun out here today, folks, because what you're going to see, gold right now is down $8. And, geez, let me pull this up, baby. Okay. So what we have is that you're down 760. Your expansion down had some juice into it. Let me put this on 2 days. 1 second. Okay, so there's 2 days. So the question is, does it want to go run to 1226? Yeah, interesting. Okay, so 1226 would be the number, and right now you're at 1218. And what you have to do here, though, is that this correlation is going to be direct with the dollar. So DXH, let me pull this dollar up for a second.
Dollar index going on?
Yeah. So if we take a look at this, so the dollar had, okay, so what I'd like to see here, okay, so when that PPI came out, well, was it, yeah, not the PPI, what happened is the consumer index came out at just at 10 o'clock. That pushed the dollar up to 88.72. You're at 67 right now. So what I'd like to see is I'd like to see that get tested, because what that is doing, that's coming into the downdraft of yesterday. So at 88.69, you're at 64. The way you'd set, where you'd set that trade up is you let the dollar index get up there first, As the dollar index is getting up there, if you get the test and it's on lighter volume, then you flip over to the gold contract. And what you'd be looking for is that you'd be looking to go long gold. And if we look at these contracts, and this is something that you'd want to make sure, yeah, we're at 10:11. You'd want to make sure that you still have plenty of time in that.
Like a 130 probably.
Yeah, in that contract. So if we pull, you pull that 130 up right now. Let me see. So 12.19. 12. Oh, interesting. That's interesting, isn't it? If I bought one of those.
Which one are you looking at right now?
Well, this is interesting. This is you talking about the defined risk. The 1220 to 1260. You know, you're 1 point out of the money, right? 1218. Well, yeah, you're $1.30 out of the money, but you could risk $32. And I don't think gold's going to go to 260, but you'll only be risking $32 to make 368. That's one of them, and that would be to 130.
Now you're on February on gold?
Yeah.
Okay. I'm getting. Are we talking about the 130, 1220, or 1260?
Yeah.
Because it's at 1223 right now.
Right.
And we got gold at, 1218? We're a few points out, but that's still not bad.
Right. I meant you 1 point, a few points out, but you're 1 point out of the money, meaning 1220 is the beginning, right?
Okay. Yeah.
Right.
Okay, gotcha.
Right.
Sweet.
Right.
Okay, yeah. And then we're expecting a pretty decent run here. So and this is actually a really good listen. So what would be your profit target? I'll teach our listeners a trick here. What's your profit target?
So we put this baby up, and you're at 12. Let me put this on 2 days. Well, you have two different ones. One of them, the good one is up at that 1239, which I don't think we'll get it today, but that's where this thing wants to go. But intraday here, I can make a case here that it wants to go to 1226, and 1226 is the lows of the high of yesterday.
Perfect. Okay. So what I do is to make it really fast to look at like risk reward.
Yes.
One, of course, it's your risk, like $30 risk.
Okay. Yeah.
And then I go, okay, what's my profit target and what's my entry price?
Right.
And go, is that worth it? So if we're going to like 12, 28.
Yeah.
Then we got say 5 points.
Okay.
Right. A profit. We got 3 points of risk, or that type of thing. So by looking at, because sometimes I get like it's so easy to get caught up in proximity of distance.
Yes.
That you lose sight of the reality of that's a great risk-reward trade.
Yes.
So like as soon as you're set up and you're ready to see the setup, you're like, hey, I think it's going to here. If it gets to my target, that's an awesome risk-reward trade. I don't care about the proximity. I don't have any stop loss. I don't have to worry about it.
Yes.
That's an acceptable risk to me, and you put those pieces together.
That's it. Yeah. No, that's a great way of looking at it.
Because people will just get caught up in, wow, man, that's like 4 points off of where gold's at right now. And it's like, well, yeah, it is, but you're still at greater than 1-to-1 and you have no stop loss.
Yeah, no doubt. Now, I'm going to swap gears here quickly, because what you do have also, folks, is that when you're trading these, you can trade indices, you can trade currencies, you can trade commodities. And the S&Ps themselves, they have 20-minute binaries. And if we pull this up, this would have been let's see, so where are we? We're at 2022. Now, what you'd want to do, well, not necessarily, let me see, 20. Oh, yeah, look at this. None of them, the 22nd, I see, 2027. Interesting. Oh, I got the wrong ones here. 1 second. So what I'm doing here is I'm looking for contracts on the 20-minute level right now.
Okay.
Something's going on here. I don't have any bids on these. 1 second, hold on. Oh, bid size. 1 second, hold on. Why don't I? 4 minutes left. 2022. They're all too far out, so it'll be the next 20-minute one that's coming up, right?
Right, because the good thing is they're really narrow. The bad thing is they're really narrow.
Yeah, right. Interesting.
So,
okay.
It really, it helps you out quite a bit whenever you're trading them. But if the market explodes right then, then it will take out quite a bit of them.
Right. Which that's what you have happening here. So here goes gold. Interesting, man. So the market, folks, just to cut to the chase for a second, the larger market, Dow, S&P, NASDAQ is the ABC structure on the way down. We're going to see how we basically go after this B point, and I can tell you, so 159.
In just a few minutes we'll have them, so we'll have more split now.
No, exactly. So the S&P, the SPY, we need 159 million for an ABC structure on the way down. We've already done 35 million. That's pretty intense selling, folks. Okay, within only 35 minutes into the marketplace. So your probability is that you're going to break the swing. You're going to do it with volume. That sets up an ABC structure on the way down. And the larger picture, and this is where whether you're trading anything, but if you're trading this Nasdaq Nadex product, you can really have a field day. Because what you're going to see, and I'll put this up right now, is that what we're doing today is that we're going after the longer-term trend. And it looks to me that it's going to basically break once again, and it's going to have the conviction behind the move. And what that specifically would mean is this, is that in October we broke down. But what we did is that it failed and went back right inside the channel again. Well, this morning what's happening is that you're breaking that channel again. If you break that channel with conviction, we're underneath the channel right now, that's basically setting up two different things. It's setting up, number one, wants to go to the 1820 on the S&P. You're at 2028. Larger, though, it sets up a much larger deal back to $1,340. And that will blow people's minds away.
Yeah, I thought it was dead. It's flying all the way back, yeah.
Yeah, 1340 is a nasty number, you know.
Yeah.
And if you go over to the oil market, I've been bringing this up, but if you go to the oil market, folks, bottom line is you get a crash going on, you know. And the correlation inside the oil market and the Dow Industrials would be blowing people's minds, okay, because it would be like the Dow Industrials going down 7,700 points in 4 months. You know, so
that's it.
Isn't that crazy?
That is. When you think about it that way, you're like, oh my gosh.
Yeah. I know. Listen, man. You know, it's so wild. But if you're in that oil business, I mean, there's going to be some damage here. You know, you hear it all day long. People saying that no, there's going to be no damage. What do you mean there's not going to be any damage? I mean, that's some heavy duty money. And what ends up happening, folks, you know, each and every time in any business, you know, people lever up. And once they lever up, and you've heard this a million times, once the tide goes out, guess what? There's plenty of people with no bathing suits on. And, you know.
Yeah, well, yeah, exactly. I mean, basically what you're saying is people are going to go in. A lot of people are going to start fading this and start buying, too. And they're just going to get hammered even further.
No doubt. No doubt. You stay right there, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. Check it out on the front page of TFNN, folks. You'll see the Nadex banner. Hit that banner. Bring up the account. Dow Industrials right now down 114. Nasdaq's off 15. S&P's are off 6.5. We're going to be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rose, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. We're talking the Nadex product, folks, and if we take a look, we just had the new 20-minute S&Ps just popped back up. Every 20 minutes, you can be out here trading these babies. So we're at 2025 right now. And this would be sweet. Okay, so, you know, Darrell, it's a trip. Okay, so 2025. I'd like to see this thing move, folks, up to about 20. I don't think it's going to hit 30 again, but it would be sweet if it had even the 27. Because once it gets up to the 27, you're dealing with, we're 15 minutes into it right now. And what I've noticed, you know, we were talking about this last week, it seems that if you can get these things at about 11 minutes left, somewhere in that time frame, what happens, folks, is that some of that time comes off, and then they basically they not only tighten up, but if you can simultaneously get the swing point and that at the same time, your reward versus the risk is pretty cool. Because like right now, you know what I've been doing, Darrell? I like these ones that you're not really putting up more than like, whether it's $20, $21. Do you know what I'm saying?
Well, and here's something that you know, I've been bringing up to some traders. You know, they go in there like, well, I don't know if I like the spreads. I like to buy. You know, they get all into this.
Yeah.
And I tell them, like, if you're trading a binary, you're trading something, and if you're trading something for 20 or 30 or 40 bucks,
right,
you're trading an out of the money contract,
right.
You're already willing to do that, and that's an all or nothing result.
Right.
You can go in here, you can get at the money, in the money, maybe a little bit out of the money, but it's not all or nothing, and you have a lot more profit potential.
Right.
And it's a lot easier to understand the concept of how the market's moving with that trade. So I'm trying to tell traders, I'm like, dude, you're going to last longer. Just because, I mean, you're talking about dollar a tick, not all or nothing a tick. Right?
Yes, right.
And but you're going to last longer as a trader, on the spreads. So, but the binaries obviously are a lot of fun. But but they're harder to trade. I said that from day one. Spreads are a little harder to understand, easier to trade. Binaries are easy to understand, but harder to trade.
Right. And if you're trading them, folks, paper trade them first. But what you absolutely have to make sure of is that don't go to the end of the contract, even with the 20-minute ones. That's the bottom line. You got to take your profit on the other side. Because what does happen is this: is that no matter what the premium is that you're paying, as long as you're getting out, meaning on the other side, and putting something in there, well, most of the time the premium's still there. So when we go from price to price, that is baked in also. So and they like thunderbolts, okay? Whether it's going up or down, they are, right? I mean, that's
right.
Well, look at
a lot of times people may be used to like a call or put option, which is more like a spread.
Yeah,
and they're used to that variable payout at expiration.
Right.
Like in a cash settlement.
Yes.
Which is again how the Nadex spreads work. But the binaries, they don't have that variable payout. I mean, if it decides to rock 3 or 4 ticks against you, just pop.
Right.
Everything you made is gone.
Yeah, no doubt. Let's if we come over to this S&P here for a second, we just take a look at the. Let me just look at something here for a second. So, the first leg here at 177 million. The SPY is at 40. That's saying that that's going to be a break with volume. The Qs are at 14 million, and you're dealing with 46. The way this is set up right now. Let me see what the IWM is. So the Qs and the SPY are set up to break with volume. The IWM, oh man, the IWM, that's a trip. The IWM is at 11 million. 6 hours. That's set to get to a lower low too. They're all set up, and we get a long trading day in front of us here. There it is. Big Blue broke. Oh, baby. So watch this, folks. Hey, Darrell.
All right, there we go.
Yeah. The Big Blue has been building cause. And the cause has been building, folks. It has been for quite a while. And it's done now. You're at 1.8 million. This is gonna freak people out. It's not that Big Blue has been a rocket ship. It hasn't. What the problem is going to be for the market on Big Blue is that it has a very large weighting structure inside the Dow Industrials, but Big Blue happens to be in just about every portfolio out there. And this is a breakdown. And Big Blue, it's going to slice right through. 157.13 is where it had a little juice. Support, it's going to slice right through that. That means Big Blue's going to 116. But that is going to be a mind blow.
Wow.
Yeah, I know. You stay right there, folks. Darrell Martin, Tom O'Brien, appreciate you growling and prowling with us out here. Dow Industrials right now are down 123. Nasdaq's off 10. S&Ps are off 6.5 rather. Right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member, FDIC, and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. Right now, you get the Dow down 102, Nasdaq's off 8.5, S&P's off 4, and we've had some large currency moves, no doubt. You know, Darrell, let's talk a little bit about currencies on the Nadex platform, because what I feel I'm looking at right now, which is going to be pretty cool, is that the dollar's topped out, and when we finish the day out here today, folks, okay, on the continuous contract, the dollar right now is trading out there at 88.38. A close under 88.51, which I suspect we're going to get today in the continuous contract, is going to set up a pullback. Now, that pullback, you know, Darrell, when I'm looking at that pullback, it's like pretty sweet, man. I mean, so this is where this goes. A normal pullback, just that the dollar doesn't have to go to the end of the beginning of the range again. A normal pullback is like about 4 points from where we are, you know. And of course, what that would mean, and I know that the liquidity inside that yen is huge. What that would mean, that, you know, right now the yen's at 118. That would mean the yen can run down to 112. So, you know, that's wow. Yeah, I know, you know, because you know, we'll see where that goes. But what happens here is that
see that thing going all the way back to 112.
Yeah.
So yeah, wow.
Yeah.
It's a massive move.
It is a massive move. And that 112, though, you got to remember something. We started out at 101, folks. We went 101 to 124. You know what I mean?
Right,
so
yeah.
What's cool about that, well, what I like about that whole dollar thing, what's happening right now, is that the extension's been so long that the pairs inside those currencies have been the same thing, meaning the weakness in the yen. So you don't have to be right in the context of what the longer-term trend is. And I think the longer-term trend is the dollar wants to go up. But it's just taking a breather. That's, and that breather, however, percentage-wise, will be a decent percentage. That's where this seems to be shaking out. So,
okay, so that's looking about a 50% retracer right there.
Yeah,
too. So,
right.
Yeah,
right. And
okay, that makes sense.
And now this is where this would be the other confirmation. You'd have the probability-wise. The way I would look at it is this: if the dollar, as it's pulling back, is pulling back on light volume, then that could be a 0.382 retracement or something, not the 50, right? But what we have thus far is that what we had yesterday is that you actually had a lower low at monster volume. We had 73,000 contracts, 72,000 contracts at that 88.19 level. So I'm saying, okay, that's good. That is saying to me that, first off, it's going to get tested. Second, which is more important, though, is that next week on a follow-through, will you be coming off the high with volume? And if we're coming off the high with volume on that dollar, that's saying it's going to be a bigger correction. So it's going to be kind of neat watching this whole thing shake out, man.
Well, it gives us a nice, fun trend to play with, too.
It does. It does. And that's what you need. You know what I mean? What happens, folks, is that when you listen to us, you need a longer-term trend, and you're trading short-term inside that longer-term trend. That's when we're all geniuses. Right?
Exactly.
No,
you identify that long trend, you go with that trend, you buy on the dips into that trend, buy on the dips into the uptrend, sell on the rallies into the downtrend. Don't do the opposite.
Exactly.
So, play with the trend, but, figure out the best moves in that process.
Right.
Yeah.
Yeah. And, if you wonder why you're...
And realize when you expect it to be over at a certain point, or at least get that major hesitation block, like at 112.
That's right. And that, in the context of the market and the whole year, folks, you only get so many shots like we have, like I feel like we have right now. What it is it's because everything's been so extended. And when it's so extended, it is, the trade set up much better on a reward versus a risk basis, because you don't have to give them any breathing room. When we're in the middle of swing points, it's heavy, because the bottom line is that the reward is smaller because the risk is larger. No matter what side you're on the market right now, a bottom line is that you don't have to. If you're a bull, well, guess what? The market's either going to go or it's not going to go. My take is that if you're a bear, you're in a better position at this particular point, particularly because we're at highs. Okay, we've come off the highs with volume. What we have also just had is a couple downdraft that folks weren't expecting, and on a fundamental basis, what you're going to see here is that money managers get paid to basically make sure their clients don't lose money. Well, October was bad enough. Money managers are going to be thinking this thing through today, probably more so over the weekend, saying, okay, hold it. Is the market going to go up and I'm going to lose that, or should I just protect what I have out here? My take is that they're going to just protect what they have out there because they're going to get paid anyway. But if they take a downdraft, and if, let's say, this downdraft does go down to the 1850 before the end of the year, then guess what? That means most money managers have got to make zero for the whole year. That's how this is shaking out. So there's going to be some dynamics that are playing out here next week. Because realistically, next week, that's it for trading. The week after that, folks, is Christmas on a Wednesday this year, right? I think maybe it's the Thursday. It's a Thursday, but
Thursday. Yep.
That following week,
and then we got the following Thursday.
Exactly. And once that vacation starts, it starts. Period.
That's honestly another good point to bring up about, a lot of traders, they really either want to, need to, etc. Need to is not a good way to trade, but, during the holidays.
Yes.
And there's really light volume, so markets can just I mean, they can just like fly on nothing.
Yeah. No, the unfortunate part, no, you're absolutely right, man. And that's when what happens, and I understand this, Darrell understands this, you know, we happen to be lucky that we're in front of these computers every day. And if you have off, that's when folks like to get in front of them, and that's the hardest time to do it, folks. That's the bummer.
Yeah.
You know what I mean? You know?
And, I mean, that's one of the reasons I do bring up, again, Nadex. You know, it's just, at least you have that defined risk. And you don't need to trade large just because you got time, right? I mean, keep it small if you are going to do it.
Yes.
My recommendation is trade in demo. But keep it small if you're going to do it, and definitely have that defined risk, because you will be shocked when you see like a 5 or 10 point move happen in like a heartbeat, and there's nothing in the news. And it's just somebody came in and they just said, "Hey, we need to drop these contracts," and boom, it moved the market all by itself. And normally that would have just, you know, that would have been like buffered by all the market activity, but the volume will be so much lower. And so definitely as a futures forex trader, you need to really be aware of that. If using that leverage and you don't have any kind of hedge or defined risk with your trading, it's just a major risk you're playing.
It is.
So,
and as Darrell's talking, folks, they just took this market down a leg. So it's going to be interesting watching this shake out, because this is early. This is early in the day, man. You know.
But I mean, I was down in the pits this last few days. I was out in Chicago.
Oh, cool.
I went down to CBOE,
yep.
What's left of it. I mean, it's a ghost town out there.
Right.
But the yelling was basically happening pretty much just in the S&P pits. You know, those down legs and up legs and everything that are going on.
Yeah, right.
And but yeah, I mean, it's just, I mean, it's already a ghost town, but it was really quiet. People were already starting to take off out there.
Yeah.
You know, and but I went over to CME and CBO. You know, CME and CBO here combined now. Went over to down to the CBOE itself, and basically you got the ETF pits going on. You got the VIX. You got the SPX, and you got some market makers, out there pretty much now. So have you been down to the CBOE lately? That thing is just, it's so quiet.
Isn't that wild? And, folks, and I haven't. Okay, the last time I was down there was in the 90s, and that...
Oh, if you walk in there now, you'll just be like, oh,
Oh, I know. Gosh. Listen, I remember when what they had done, folks, okay, so the CBOE... They got cool getting these handheld computers, okay, and that's inside that market. That's all they needed to skew the market in a huge way, okay. And simultaneously, what they had done down there is that they had just finished one half of the building was the bond pit, and it never opened. It never opened because everything got so electronic. Is that a trip? Yeah. And
it's funny because it's like inside the actual pit for the S&P options, they're not allowed to have headsets.
Right.
But the guys around the pit can have headsets.
That's right.
And so you got these guys.
I know.
What's happening is they're talking to the traders over at the CME, doing ES or options over there. And they're literally they're doing hand signals back and forth to each other.
That's right.
On volume and activity and stuff like that happening over on the S&P, back over on the S&P X options.
Exactly.
Between the two pits. I mean, it was really interesting just to watch.
Isn't it? Yeah.
The dynamic. Yeah.
And what happens, folks, is that, and this hasn't changed in that S&P pit, there's a couple, real math geniuses there. And that's what they're all looking at. They're trying to, as Darrell's talking about, so if you pitch out of you get the pit, you get the guys around the pit, and then there's guys upstairs. And if you watch them, it goes from the pit to the guy on the side to the guy upstairs. That's how this whole thing is shaken out. Do you know what I mean? So
it's like watching a baseball game.
Yeah. No, I know, man. Because what the other traders are looking for, they understand a couple traders, whether they're coming in selling or buying, they're coming in for larger firms selling or buying, and that's what they're looking for. So there's still a little edge down there. There's not much of an edge, though. But years ago there was a huge edge because most of the time you know where people stand, meaning who are they coming in for, how fast are they coming in, how heavy they're coming in. Yeah,
a lot of the edges. I was talking to some of the guys down there, and I mean, like Group 1 market makers, stuff like that's down there, and they said a lot of the edge really is actually in the complex options at this point.
Right.
Because they're going in and they're basically able to go in and find that little bit.
It's the arbitrage,
fill that order for somebody. Yeah, they'll do the arbitrage on the complexity of the option and lay it off. And the VIX thing, I was getting into that. I spent literally like an entire morning with a guy who used to be a market maker for Group 1. Now he's just a quant trader.
Okay.
And he just loves these VIX options because it's a derivative of a derivative, like basically of a derivative.
Right.
And so the implied volatility is insane. Like you're getting in the money spreads for better than 1-to-1 risk-reward ratio, like credit spreads. And there's some weird little intricacies. You know, he's like, here's about 30 white papers to read on it.
Yep.
You know, but I'm like, I wonder how I could hedge Nadex with that. You know, have some fun with that. So, but there's some interesting plays. There's a lot of combinations you can do with these things.
And those arbitrages, that's where the biggest amount of money is. You know, there's a hedge fund, folks. I don't have the name of it right here, but
and just before you get too excited,
here it is right here.
I get a small amount with a large amount of money. So
yeah, no doubt. And what has happened, just even with that downdraft last month. It's the large quants, you know, that are running arbitrage programs off these different vehicles, because there are so many different vehicles right now that are basically making big money. You know, there's a fund called 2 Sigma. They run $24 billion, but check this out. They're up 47% this year. You know, now they didn't start with $24 billion. You know, at the beginning of the year, they're probably, what, at 18? They're up 50%.
Is that all?
9. It's actually, you know, but I mean, that's a big number. Do you know what I'm saying?
Yeah.
And all they're doing,
but with an ARB, and you know you got the fill. You always have that risk of fill. But
right.
I mean, obviously, when you're got the floor connections and everything else, so when you know you got the fill, I mean, you can go in insanely heavy. Yes. So I remember I was working. I used to do arbitrage research for a desk, and we were sitting there. We were actually doing forex arbitrage.
Yep.
And me and this other guy were just like pounding out this trade on a triangular arbitrage on forex, and literally like I was hitting the buttons and he was doing the math.
Yes.
And he was sitting there and going, okay, you can do another one, you can do another one, you can do another one, you can do another one. You know, we had like about $1 million in the account that we could do it with.
Yeah.
So we were just pounding. He's like, okay, stop, like, because like we knew like at that point like we couldn't go any further due to the margin. At the end of the trade, I mean, it was about 15 minutes later. We made like $28,000 on the trade. But, I mean, there's $1 million literally in cash used, you know, and that was, like, leveraged at, I don't know what, like, probably 400 to 1 at that point. So, I mean, it was an insane amount of money, but, I mean, it's still a nice big profit. But if you get that large profit, then you got those, and, like, you got that really great leverage, then all of a sudden you can actually make some really good profits. You do that over and over and over again. It adds up. It's quick. So.
And it's still liquid. That's the key, folks. The key is the liquidity inside that deal, you know.
But and they have more depth of liquidity because, you know, like let's say a trader puts a trade in over on a broker. I won't name any specific brokers.
Yes.
But they put that trade in on, and somebody else is like, oh, I'll take that. It never even hits the floor. It never hits the electronic.
Right.
You know.
Right.
Because they'll just grab that big order. You know, they're like, I have this many, and so there's that over-the-counter SPY, which is actually bigger, actually, even than the right there inside the pit.
Yeah.
So, but I mean, and it's exciting stuff. It doesn't mean that as a retail trader you have to have that. It's just fun to hear about some of that stuff that's happening out there. And at the end of the day, it is, you know, there is a liquidity provision on it. It's helping orders get filled. So, bottom line.
And it's good for folks to understand how that works. That's whether you do it or not. Most of us can't do it, folks. You need, you know, hundreds of millions of dollars. But it's important to understand how it does work so that you understand the mechanics inside the marketplace. That's a big deal. It's S&P right now. So we only need one break. Let me see. 10:49. See, this S&P right now, folks, is building cause. It'll probably take another half hour, probably when Basil's going to be on. It's building cause to break down this 2018 level. It's going to get interesting. You stay right there, folks. Darrell Martin, Tom O'Brien. We appreciate you growling and prowling with us out here. IBM, folks, is toast. Get the butter out, get the peanut butter out, get the marshmallows out, get it all out. That thing is a toast. Dow down 134, NASDAQ off 16, S&P's off 850.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us. So don't forget, folks, if you haven't test drove that Nadex platform yet, it's real simple to do. Check it out on the front page of TFNN. Bring up the platform. They'll put $25,000 of paper money into it. Start trading these contracts so you can get used to how they trade. Volatility is out here in spades, and it's going to continue being out here for quite a while. Dow right now is down 150. Nasdaq's off 25. S&Ps are off 11. And what you have, the correlations are all over the place right now. If we start with the S&P, we're just talking about that wants to get into that 18 level. Bottom line is that I thought maybe to wait for Basel for the 18 level, but it looks like it's going to go after it right now. ESZ FOA. So what we have here is that the low out here. Let me put this back up for a second. Okay, so what you have, let's see, we're 5 minutes into this bar right now.
18's been a strong level. That's been actually one of the levels I've been playing off this morning.
It has. So. No, there's no doubt. It's 18.25. And we'll see how basically it handles that. What my take is that it's going to break it right now, and this is why. If you go over to the dollar index, what's happening is that you got, gold was down 6 when we started. It's only down 240 right now. Silver went positive. Okay, the dollar index is ready to take a dive. We just ticked down to DXH5. We ticked down to over 420 down. Right now it's 362. Let me put this right here, and it doesn't take. See, there's someone just sold into this. Okay, so the dollar index is pretty cool, folks. It moves slowly up or down, but the volume characteristic works nice with the two, because you're at 30,000 right now. When we popped higher this morning, you popped higher with 1,800, but the 1,800 was going into 2,100 from yesterday, and that's all it did. So that correlation was saying, okay, it can't make it up. Someone just hit the dollar index, pushed it down to 88.51, which got a minus 400. I suspect that person's going to be coming back in, because when that happened, it all correlated. That ticked down, S&P ticked down, gold ticked up, So those correlations.
Now, we talked about the correlation on gold.
Yeah.
And, a lot of times seeing you don't get it all the time, but you see that leading move on dollar index, and you can grab that on gold.
Right.
How are you using that, over on the S&P specifically?
Well, what happened is that this correlation really just came into play like about 2.5 weeks ago. Okay. And what it is, maybe 3 weeks ago. What it is this: the market absolutely cannot stand the dollar ticking down at all. What I don't know is that as that dollar ticks down, is there someone, a computer program forcing into the S&P? It seems it. Okay. The reality goes like this: once you catch on to something like this, folks, you want to stay all over it, because the correlation is direct, and it's like within seconds. So I like correlations like that, because it brings a higher probability that I know where the S&P is going. Okay?
Right.
And then the second part of that correlation, though, is that with gold moving up simultaneously, you're cementing that. Now the third correlation, and the biggest correlation that has been the most steady of this whole deal that this market wants to pull back, though, has been bonds. Bonds have been screaming on a continual basis that bonds want higher price, lower yield, and that's what we're getting. And what we do have happening out here today is that you have the bond market taking out a swing point, and it has the juice behind the move. Right now, we're at 145.09, and that 148 is going to get hit. It's going to be a total mind blower. Man, I can't believe how quick our show goes on a Friday, man. Isn't that crazy?
It flies by.
It does, man. Well, listen.
It's the morning, man. These things are happening. You can go through and watch there's 1,000 things to talk about.
No, I know.
So.
You stay right there. Basil Chapman's coming up next. Nico Page. Our man Darrell Martin's going to be right back. Dave, and we'll be back this afternoon. Have a great one, folks. Have a safe one.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.